Dana Gain, and today we're talking about June 2022 market results. Where have prices fallen? It will come as no surprise that housing prices have settled in the past few months. Rising interest rates and the resulting consumer hesitation have combined to create a real estate landscape that's very different from what we've seen over the past 2 years. Let's call it the new normal. The question is, which segments are seeing the most significant price drops? Let's take a look. The average price of a detached home in Halton region during the month of June 2022 was just over 1.6 million as compared to March's 1.9 million. This is a 19% decrease. Most of the hit was taken in Milton and Oakville, with detached sale prices correcting between 22 and 26%. Burlington, interestingly, remained essentially flat over that 3-month period. Peel region fared slightly better. The average price of a detached house in June of 2022 was just over 1.4 million versus the 1.675 seen in March. That's a drop of 17.6% over that 3-month period. Most of this drop was actually seen in Brampton, showing a 26.4% decrease as compared with just the slight drop in Mississauga of 9.4%. Remember, this is detached homes only. Next up is Freehold Townhouse. Townhomes also saw a price decline since March of this year. Halton showed just under 20% price decrease, and Peel came in slightly better, demonstrating a 19.2% price drop for this segment. Condo Townhouse, we separated these out because, of course, there is a substantial price difference and a few other differences as well between freehold and condo. Condo townhomes also saw a price decrease in the 3-month period since March. Halton prices came down 18%, and Peel saw a slightly larger drop by June at 18.8%. Here's where it gets interesting. Condo apartments did not correct as much in pricing between March and June as the other housing styles. Halton and Peel saw decreases of just 10 and 12% respectively for this housing style between March and June. But fear not, it's not all doom and gloom out there. Experts tell us that despite the shorter term impact of higher borrowing costs, housing demand will remain strong over the long term. This is a result of the fact that homes are still in short supply relative to those who need it in Ontario. According to the Toronto Regional Real Estate Board President, Kevin Krieger, home sales have been impacted by both the affordability challenge presented by mortgage rate hikes and the psychological effect in which buyers have put their decision on hold to see where home prices end up, or put another way, waiting for the bottom. Krieger goes on to say, expect current market conditions to remain in place during the slower summer months. Once home prices stabilize, buyers will re-enter the market despite higher borrowing costs. Our conclusion from this brief analysis is that prices have likely corrected as much as we expect them to. The next few months will likely be a plateau as buyers and sellers sort of recalibrate their expectations. Buyers will be getting their arms around the new normal, which means witnessing housing prices lower than we saw in January of this year, most certainly. These lower prices will be offset by higher borrowing costs. At the same time, home sellers may pause their plans to sell while they wait out the market, reducing the number of homes available for sale. And this, on the other hand, could result in a return of tighter market conditions. Stay tuned for further updates right here as these market conditions continue to unfold. And if you have any questions about what the real estate market is doing in your area, please get in touch with us today. My name is Dana Gain, and I'm here for all your real estate needs. If you enjoyed what you saw in today's video, don't be afraid to give it a like, share it with your friends, and of course, subscribe to this channel. And if you have any questions about real estate in your area, please email info@danagain.com. Thanks for watching. See you next time.